In this video, we will learn how manufacturing costs flow and learn to calculate total manufacturing costs, cost of goods manufactured, and cost of goods sold. Every product manufactured consists of direct material cost, direct labor costs, and factory overhead costs. First, raw materials that have been purchased by the manufacturer are added to the manufacturing process. They go into work in process. Then direct labor is added to help convert the materials into the product along with factory overhead. When the item is completed, the costs are moved over to finished goods inventory. So we need to get a little more acquainted with the inventories in a manufacturing company. So raw materials consist of materials purchased for manufacturing that have not been entered into the manufacturing process. The materials are just sitting in inventory waiting to be utilized or requisitioned. When the materials are requisitioned or requested for a job, they're moved over into the work in process inventory. Work in process inventory consists of products that have been started but not completed during the manufacturing process. They're simply partially completed products at the end of the accounting period. Finished goods inventory are completed items that are waiting to be sold to customers. The three inventories, raw materials, work in process, and finished goods, are very important in accounting for cost of goods in the manufacturing process. All of these inventories appear on the balance sheet of a manufacturing company under the current assets section as shown here. Remember, with a merchandising company, only one inventory is shown, and that's the merchandise inventory. Before completing the cost of goods sold section on the income statement of a manufacturing business, we have to first calculate the cost of goods manufactured. Notice that all the inventory balances that we talked about earlier, beginning and ending inventories, are used in the cost of goods manufactured and the cost of goods sold calculations. We've got beginning raw material inventories and ending raw materials inventory, beginning work in process and ending work in process, and beginning finished goods and ending finished goods. All of these inventory figures are necessary to calculate the cost of goods manufactured and to complete the income statement. So let's work through a few examples. We're about to learn how to calculate cost of goods manufactured. It is a multi-step process, but remembering this simple formula will help you complete the calculations needed. This formula will help you calculate the amount used or moved out of a particular inventory into another. So you really need to remember this formula. So it starts out with beginning inventory of whatever inventory you're working on, any additions that were made to it, such as purchases or amounts transferred in from other inventories. So when you take the beginning and add the additions, that will give you the amount of inventory that was available for that accounting period. Then if you subtract out the amount of the inventory that was left at the end of the year, that will let you know how much was transferred out or sold during that accounting period. So let's put our little formula to use. We'll first use the raw materials inventory to calculate the raw materials used in production. So remember, we have raw materials inventory, and some of it is going to be moved into production, into work in process. So that's what we're trying to figure out now, is how much of the material inventory was moved in to work in process. So it says raw materials purchased are $60,000. The beginning raw materials inventory is $20,000. The ending raw materials inventory is $15,000. So we're going to plug these figures into our formula to find out how much was moved out into work in process. So beginning inventories given at 20, we made 60,000 in purchases, and our ending raw material inventory is 15,000. So beginning inventory plus what we purchased gives us 80,000 in raw materials available for the whole accounting period. And then at the end of the year, or the end of the period, we only had 15,000 left in ending inventory. So this means that 65,000 is missing, or it got transferred out into work in process. Okay, so now that we know how much in materials was added to work in process, keep in mind that total manufacturing cost is made up of direct materials, direct labor, and factory overhead. So we have our material figure here. We need to add the direct labor and the factory overhead. And the problem tells us that 90,000 was for direct labor and 70,000 added for factory overhead. And when we add those three together, that gives us the total manufacturing cost added to work in process. So now the next step is to calculate the cost of goods manufactured. So in this step, we're working with the work in process inventory. So remember, in the first step, we worked with the raw materials inventory. So we're working with work in process now, and same formula, we're just going to plug our figures in. Beginning work in process is 32,000. The additions were, remember, from materials, labor, and factory overhead that were added to work in process. So overall, we added 225,000 to work in process, which gave us 257,000 in cost in work in process for this period. At the end of the period, there was only 38,000 left in work in process, so that means that 219,000 is gone, so that means that was sent to finished goods. Okay, so this 219 is the cost of goods manufactured. So now that we have the cost of goods manufactured, we can calculate the cost of goods sold that's going to appear on the income statement. So with this calculation, we're working with finished goods inventory, and we're just going to plug it into the same formula. So beginning inventory of finished goods was 60,000. We added 219,000. That came from work in process. So the total finished goods available for sale were 279,000. At the end of the year, our ending inventory is 55. If we still have 55,000, then the remainder of 224,000 is gone, or it was sold. Okay, so that is how we're going to get to our cost of goods sold figure on the income statement. And remember, from there, we calculate our gross profit by subtracting cost of goods sold from sales, and then we would subtract our period cost, selling and general expenses, from the gross profit in order to get our net income. So let's all put that together in one problem, and we'll work through it one more time, because this is going to be an important calculation that you're going to see on your exam. Okay, so from this data, we're going to calculate the cost of raw materials used. Remember, we'll work with our raw material inventory. Total manufacturing cost, that's where you add materials, labor, and overhead. Cost of goods manufactured, that's where we work with the work in process inventory. And then cost of goods sold, we're going to work with the finished goods inventory. And then from our cost of goods sold, we can calculate gross profit and net income. Okay, so we'll start with A. It's where we always start with our raw materials inventory. We're going to plug the figures that were given in the problem into our formula. Beginning inventory plus additions minus the ending inventory. So beginning inventory for raw materials is $28,000. We have made purchases of $325,000 given here. So during the period we had $353,000 in raw materials available. So at the end of the period we counted our raw materials and we only had $22,000 left. That means that the rest, or $331,000, were transferred into production, into work in process. So now for B, we're able to calculate our total manufacturing cost. Remember, that's materials, labor, and overhead. So we have our direct materials from above. From one calculation, the total from one calculation, remember, will flow to the next. So our direct materials here came from the previous calculation of $331,000. Direct labor is given at $272,400, so that was added. Factory overhead was added at $136,200. So when we add up our three manufacturing costs, we get the total manufacturing cost for the period. And this is what we're going to use, the $739,600 down here in the cost of goods manufactured calculation. In this, we're going to go back to our work in process inventory and plug the figures that were given here into our formula. So beginning work in process, if we look up here, is $31,500. We've added $739,600 as the total cost of manufacturing. So that consists, remember, of materials, labor, and overhead. So we started with $31,500. We added $739,600 in materials, labor, and overhead. So now in work in process, we have a total of $771,100. At the end of the inventory, we did an inventory on work in process and realized that there was $26,600 remaining in the ending inventory. So that means that the difference, $744,500, was transferred out to cost of goods manufactured. So that was going over into finished goods. Those were completed and moved over. So now it's time to do the cost of goods sold calculation, and for that we use the finished goods inventory. Beginning inventory of finished goods was $26,800. Entered that here, and now we're going to add the amount that was transferred from work in process, $744,500. So that was our additions. So the amount of finished goods available was $771,300. So if we look to see what was in finished goods inventory, it was $38,200. If we back those out, that means that $733,100 must have been sold. So that's going to be our cost of goods sold. So since we have this cost of goods sold figure, we can figure out our gross profit. Remember, this will be shown on the income statement. We'll have sales, these calculations in between, that'll come up with a total of $733,100 as the cost of goods sold, and that will give us gross profit of $133,150. And then from gross profit, we're going to calculate net income by subtracting our period cost, the general and selling expenses that were given in the problem, which were $65,000 and $45,000. So that leaves us with a net income for this manufacturing company of $23,150.